Good morning, everybody. It is a gorgeous day here in Chicago. If you like snow at the end of March, which I do not, but here's hoping that this melts away over the next couple of days. As I look at the weather outside, it is frightful, but inside things are delightful. And of course, that I mean inside the area, the option pit chat room area. Just kidding. But no, seriously, folks, things have been we've had some interesting weather the last couple of days, but from what I hear, we're gonna get warmer and warmer and warmer over the next couple of days, and it looks like spring may finally have sprung, and we may finally get rid of we may finally be ready to say, hey, here's spring. All right, folks, let's talk about the markets. Well, we've got some weakness in some of the airlines today, and that's because there was a crash in Europe of an A320, and hopefully they're not just definitely not a good thing. We've had a really powerful, nice run over the last couple of days. If you look at a daily chart, let me pull that up, and we'll pull up SPX. I mean, you can see the run that we've had in the last couple of days, and we're getting right back up to this topping area. Question is, are we going to break these all-time highs? My guess is yes, but who knows? The way they're taking volatility down, if you look, we're down, and VIX is down, and VIX futures are down, kind of across the board. All right, that's usually not a good sign for, that's usually not a good sign for VIX itself. And in fact, the curve itself is extremely flat right now. So take a look at May. May is 1745. Take a look at June. 1795 for, if you look at how term structure usually looks, 50 cents is extremely tight for these two, especially given the gaping hole between April and May. So there's definitely some interesting sentiment going on in the May-June timeframe. It could be seasonality related to earnings. That could be one of the problems there. But you can see in the near term, they're still taking April down, June down, May down. I mean, they're really taking everything down. With that, if you look at VVIX, this is where I think things are really interesting. I mean, that's gotten, it's sitting at 6-month lows now. So option volatility premiums are just in VIX as a relative are getting inexpensive. All right. So what does that mean? Well, VIX is still expensive, and skew, if you look at skew, all right, but if you look at S&P 500 skew, it is not cheap. All right. So out of the money puts are not cheap. All right. But and vol, while at 13, is not disgustingly low. We've seen VIX get lower, and it may hang here for a little bit. I think we're going to hang in this kind of range here for a little bit. But there may be some setups forming as a hedge in May or April options in VIX, as opposed to using SPY or SPX. That may be the better hedge. You can see UVXY and VXX, just some of the decay out of UVXY. That the UVXY looks like it's broken out and is starting to head back toward maybe getting those all-time lows, and we may see this one sub $10 here by the end of the month at this rate. I don't. I'd have to pull up the daily roll, but both of these guys are now looking uglier, and VXX is now at a all-time low. So both both of those stocks, both of these appear to be broken out of they were in a pretty tight range for a while, and both appear to have broken out. The final trade that I would be watching is, keep an eye on the NDX. That's still strong. So if they're taking vol down and NDX is up and the RUT is up, I wouldn't be shocked to see the indices move to mildly higher on the day, especially if they're going to keep taking vol down. All right, folks. On that note, I hope everybody has a wonderful morning and a great trading day, and I will talk to you shortly. If you got questions, you can call me 888-TRADE-01 or email me mark@optionpit.com.